Good afternoon. Thanks for tuning in. You're watching Ask BQ on Bloomberg Quint Live. I'm Navneet Saluja D'Souza.
Hi Navneet, and I'm Alex Matthew. Well, all attention is on the economic survey and the budget. Of course, you'll find all of that on the website bloombergquint.com, both in the form of video and visual conversations, but also in the form of print. So you can find that on the website. In the meanwhile, if you have questions on equity, then you can send those questions to us on any of our social media platforms, on Facebook, Twitter, YouTube, and on WhatsApp. You can also mail us on askbq@bloombergquint.com, or you can call us on 022-454-04141.
Okay, but before we get to the individual queries on the show, let's tell you what's happening with the markets. They've not moved much even after the economic survey was tabled in the parliament today, which is predicted 7% GDP growth for FY20. Index is still trading around that level of 11,950. Sensex seen gains of about 80 points as we speak. Remember, today is also the day for the weekly options expiry for Nifty and Bank Nifty, so you can definitely expect some bit of volatility to come by in the second half of the trading session. As of now, the data suggests expiry could happen anything between 11,900 to 11,970 on the upside. But remember, 12,000 remains a key level to be watched on the index. The broader markets, they're also doing well. In fact, the market breadth has been positive since morning. Small cap index is trading with gains of 0.5%. Mid cap seen gains of about 0.2%. The market breadth will come up on your screen, which is going to give you a better picture of the entire listed universe. So till now, it is in favor of the advances. Remember, the breadth has been improving in the last 4 to 5 days as well. Pull up the Nifty contributors. That's going to tell you which are the stocks which are keeping the index in the green territory. That's Kotak Mahindra Bank. It's actually led by banking stocks. Kotak, ICICI, IndusInd Bank, all of them are registering gains, and together they are contributing nearly 15-16 points to the Nifty. Reliance Industries also trading in the positive territory. What's capping the moves on the upside is Titan Company. Morgan Stanley came out with a report where they've downgraded the counter, but they've maintained the target price of 1,300, highlighting just valuations for this company may have peaked out, and that was the only reason why they've downgraded to equal weight. But in terms of sectoral gainers today, the Nifty PSU banking index is up for the second straight day. We are seeing gains for a couple of these banking stocks. The PSU banking stocks, Allahabad, Bank of Baroda are seeing some gains, and realty is also up and about. Remember, in run-up to the budget, you tend to see both these sectors see some mild bit of gains in anticipation of some announcement coming by in the budget speech. But metals and pharma indices are the ones which are seeing minor losses today. Metals down 0.6%. Just want to highlight a few gainers from the broader markets. IFL is witnessing strong gains. That's up about 13%. Dish TV is up and about. That's seeing gains of about 4%. Raymond is up for the second straight day. Remember, it's also an F&O counter. We are seeing some long positions here. Bank of Baroda, as I mentioned, was up 4% yesterday and is up another 2.5% in today's trade. On the losing side, you've got MT Educare. That's locked in lower circuit once again. The circuit limit has been revised from 20 to 10% today. Quest Corp is trading at its fresh 52-week low. This counter is down 7%. And Saskin Technologies has also come under selling pressure. This has seen cuts of about 5%. And lastly, new kid on the block. You had the listing of India Mart today. Issue price was 973. This has had a strong listing. The stock currently trades with gains of about 30% at levels of 1,264, Alex.
What a stellar listing that is. And what an introduction. A little doubt because it was oversubscribed 36 times, so a lot of interest in that counter as well. But let's get our two experts in for the day. We've got Ashish Kelkar of Kiran, Jadhav and Associates and Sandeep Jain of Tradeswift Broking, both here to answer all of your questions this afternoon. Thank you so much, gentlemen, for joining us. I want to take you through the technical picks that have been sent to us by Ashish. He's got a couple of picks to tell you about. Tata Motors DVR, he says you can buy at the current level. It's trading just around that 82 mark, up about 2.2% in trade as of now. He's saying that you can buy it with a target of 88 and a stop loss on this trade of 79. The second call, Navneet mentioned that the banks are in focus today. ICICI Bank is just about up and about 0.6% of a gain in today's trade. He says that you can buy this with a target of 447 and a stop loss of 436.
Okay, those are the technical picks, but I guess we've got some fundamental picks also coming from Sandeep. So he's chosen 3 stocks. One of them is Mahindra Life, the other is Saint Gobain, and the third stock is Greenply. These 3 stocks are the ones which Sandeep has chosen on fundamental basis.
All right, let's get straight down to the questions that we've already received. A lot of you have written in. Suresh Kulhari is looking for a view on Quest Corp, and in this one, he's looking for both the fundamental and technical view. So, Ashish, I'm going to come to you on the charts first. It's under pressure today as well, 7.2% from what I can see on the Bloomberg. It is at a 52-week high, yet a 52-week low rather, yet again. How much of a downside do you see in this counter? And then we'll go across to Sandeep for a fundamental view.
Structure is bearish. It has a potential to go down further. The next level which I can see on the chart is around 450 levels. So 450 level is an important level for this stock. So one should wait and check whether this 450 level is taken off or not. I'm expecting a bounce back from this 450 mark. So if you have a medium term to long term horizon for investments, and definitely I would recommend to hold on with a strict stop loss of 445.
Okay, well, it seems, Sandeep, in fact, it's more than a 52-week low. It's hit its all-time low, if I'm not mistaken, today. And how do you see it in terms of fundamentals? Is there any rationale whatsoever to, if it drops to that level of 400, like has been suggested, to buy into it for the long term?
I don't think so. It is one of the major underperformers of the last year. If you see, in last 1 year, it has actually gone down by more than 50%, and the valuations were extremely high. And still, I think that, the valuations are on the higher side because of the competition factor also, the competitive intensity in the industry, which it is very high. Somehow it was a quality stock, but then there are some negative news also. And yesterday's negative news was that it has deferred some fundraising plans. So that's why also it is corrected. So I don't think, those who are holding it, they have to try to exit on some bounds, because the valuations are still not that cheap even after so much of correction. And somehow the results were not bad, the quarterly results and all, but still the valuations are on the higher side. So I think it is simply a hold and exit on bounds.
Okay, that's the view on Quest Corp, a counter which has been hitting fresh 52-week lows almost every single day. Last 1 year, the wealth has been eroded by almost 55 to 56% for this counter. Let's move on to the next one. Vinay writes to us, pardon me, and he has a query on Meghmani Organics. He's bought the stock at levels of about 62, and currently it trades somewhere about 64. So he's in the money right now. He wants to know what can be the near-term target. He's willing to hold on to his position for the next 3 months. Ashish, if I could come to you on the charts, at least on Y-to-D basis, the stock has given you returns of about 7 to 8% at a time when the mid-cap stocks have been underperforming. On the charts, from the next 3 months perspective, what sort of target price would you suggest?
Yes, definitely I would recommend to hold on, because it has started making higher tops and higher bottoms. So overall strength is good. My first target on the chart is 75, which can be achieved within the next 1.5 months. That 75, he has to take a review at 75 levels. If 75 level is also taken off, then definitely within the next 3 months, the price can go to around 82 to 83 levels. So the overall chart structure is very good. I would recommend him to hold on with a strict stop loss of 59 on closing basis.
Okay, we've got a question from Kunal, which I think is timely if you consider everything to do with the farm sector and allied sectors, the announcement of or the tabling of the budget tomorrow. He's asking about GNFC, Gujarat Narmada Fertilizer, Gujarat Narmada Valley Fertilizer and Chemicals. Sandeep, the question really is whether or not there will be an impact. Of course, you're anticipating changes in the budget with regard to policy on farms. If at all something comes in, how do you rate it?
The farm sector, the agri sector will certainly be the biggest focus. In fact, not only in this budget, in the coming policies also and the coming years also, because somehow India is a kind of agrarian economy, and then the kind of monsoon development is also not all that great. So I think the government will be very worried, and in fact will be really focusing on the agri side. So I think all these agri related stocks like PI Industries, then the fertilizer stocks like RCF, they can really do well, and I feel that UPL can also do well. So one has to stick to the agri inputs rather than typically those irrigation stocks and all. So I feel that RCF is a very good bet, then UPL is a good bet, and then PI Industries, somehow I really like that company, and Excel Industries also.
Okay, remember fertilizer space has been in focus as yesterday MSP on certain crops was raised. I think the average hike was somewhere about between 4 to 5%. Just got a mail from S. Kanda who's written to us. He's already accumulated stocks like South Indian Bank and Karnataka Bank. He wants a long-term view. So he's not mentioned what is his buy price, Sandeep, but both have been laggards on year-to-date basis, be it South Indian or for that matter Karnataka Bank. What would you suggest? Should he stay put with this position, or he should look to exit and buy some other banks?
Certainly, he should look to exit and buy some other banks, and he should actually try to exit on some bounds, because somehow the banking sector is really doing well, and these PSU banks have also started doing well, and then the NPA crisis might get resolved also in the future. It will not be resolved totally, but then the quality has been starting improving. The kind of regulations, the kind of compliance norms, the strictness the government is actually handling this issue with. So I think things will get better. So all these old generation private sector banks, somehow I feel that they are not all that competitive also as compared to their new generation private sector cousins. So I feel that new sector private new companies or new private sector banks will be a better bet than to stick to these kind of stocks. So banks like ICICI Bank, Axis Bank, they should be bought on declines. Then I feel that BOB is a fantastic buy, though in last 2-3 days it has actually gone up by 8-10%. So one should really wait in the expectation to the budget. So I feel that due to this, and today also these banks are actually outperforming. So DCB can be one bet where I feel that one can really invest in.
Okay, let's pull up the long-term or rather the one-year chart for Titan, just to set the context for this next question. From what I can see, around September levels were just about close to 800, and from there it's gone to levels of 1340 at the start of this month, and from there it's come down by about 50 rupees. So the question really, Ashish, is to you. Shivakumar is looking for a short-term query. Or short-term view. He's looking at whether or not there could be further correction, considering that this stock has seen highs very consistently over the last few months. So is there a possibility of a further correction?
Yes, definitely. If you remember in our last discussion, last week discussion, the stock was trading at around 1320 odd levels, and I had recommended that there will be a correction, and that correction can take the prices to around 1250 to 1200 marks. So yes, as there was a big rally in this particular counter from a level of around 1100 to 1300, there has to be a small correction, and that correction can take the prices to around 1250 to 1200 in between. So that will be an opportunity to enter into the counter or invest more. So if someone is holding this particular counter, I would recommend to hold on and buy more at between 1200 and 1250.
Okay, the reason for today's fall is definitely Morgan Stanley's report, where they've maintained their target price of 1300, but they've downgraded the counter to equal weight from an outperform rating, and they've said instead of this, one can look to shift their investment into Jubilant FoodWorks, but they've categorically said the downgrade comes on back of valuations, because the company trades at almost 60 times to 1 year forward earnings. So watch out for Titan. It still trades above all its key moving averages. I'm going to take one query from Facebook. Jayesh Tulsiani writes to us, and it's an interesting question. I'm going to come back to you, Ashish. He's asking if this is the good time to average out into Reliance Industries, or should he rather look to deploy that money into Bajaj Finance and look to reap returns of about 15 to 30% in the next 1 year. So on the charts, what would you suggest, to put money into Reliance to average out the investment, or to deploy fresh capital into Bajaj Finance, which is already trading at its all-time high levels?
See, as we were discussing about Titan, the same thing is happening in Bajaj Finance also. The stock has rallied from a level of around 2800 without much of correction. So I am expecting a little bit of correction in this Bajaj Finance. So if the correction starts in Bajaj Finance, the price can come down to around 3450, 3400 odd levels. So that will be the level where one should go ahead and accumulate Bajaj Finance. But Reliance is already in the correction mode. So I believe that he can add more for Reliance. Currently, Reliance is trading at around 1287, 1290 odd levels. A small resistance is at 1310. The moment the stock goes above 1310, the first target which I can see is 1420. So return on investment in shorter time frame would be Reliance. So definitely I would go for Reliance.
Okay, Sandeep, I'm going to pose the same question to you since we keep getting this query on Bajaj Finance, all these good pedigree companies, and the returns that we've seen on Nifty in the past 1 year, the move has been polarized. It's come from only 7 to 8 stocks, and in those 7 to 8 stocks, these two definitely feature. So which one would you prefer if somebody wants to deploy funds for the next 1 to 2 years? Which is a better bet, Reliance Industries or Bajaj Finance?
Oh, it's a great question. In fact, see, they are different stories altogether. In a portfolio, both of them can certainly find a place. But if you have to choose any one of them, then I think it will be Bajaj Finance. Somehow I feel that, in the longer run, the kind of growth this company is showing and the kind of rural consumption the government will focus on now, because the rural consumption, the urban consumption levels are actually going down. So I think the government will certainly take lots of measures where, consumption can be really pepped up. So I think whenever consumption is pepped up or whenever these measures will be taken, Bajaj Finance is one of the biggest beneficiaries of this particular story, and India consumption stories real proxy is actually Bajaj Finance. The way they have been financing the white goods, the FM, all these TVs, refrigerators and all. So I feel that whenever these consumption levels will go up, this company will be benefited. 50% is the CAGR the company is growing at. So I am really confident about the company, but then it has to come down a bit, because now the valuations are also expensive. Lots of things have been priced in. So a long-term investor can certainly invest, but a trader has to wait for some declines, some dips. And from trading aspect, I think Reliance can be a good bet because that Reliance retail story is also coming in now. So I feel, and the stock has also corrected from its higher levels. So one can take Reliance also from trading aspect from 3 to 6 months view, and Bajaj Finance already has actually outperformed, as you said. So one has to be a bit patient and wait for some declines to enter into the stock.
All right, more or less the similar views coming in from both our experts today on those two counters. Coming back to you, Sandeep, on Take Solutions, which is currently trading just around that 120 or 127 odd mark. It's again another counter that's seen significant correction over the last 12 months or so. How do you rate it in terms of the fundamentals? We've got Vicky, who's holding at levels of 120, which is under the current price.
Somehow I like the fundamentals of the company. The valuations are also not very expensive, and the stock actually went up also, then it has corrected. So when these kind of corrections happen, so one has to be worried, because somehow I feel that these days when the markets are going up, those stocks only has corrected where there is some problem of corporate governance. I'm not saying that this particular company has a problem of corporate governance. Maybe the people in the know, the people close who really tracks the company might be knowing something more than what the general investors like us knows. So I feel that he should continue holding the stock, and then he should also look at the stock from technical levels also, because at times technical levels really helps. Fundamentals might get reflected in the future, but technical somehow give you a good sign to exit the stock also. So I feel he should hold the stock at these levels, and he should check the technicals also at the same time.
Okay, Ashish, so what's your take on the charts and Take Solutions?
The overall chart structure was negative, but in the recent past, it has tried to form a trend reversal pattern. So yes, there is a probability that the price start moving upwards from these current levels. A very good base formation it has done at the level of around 111. So 111 is an important level for this particular counter. So someone can accumulate right now. So he can buy 50% shares right now and 50% at around 115, 110 odd levels, and keep a stop loss of 109 on closing basis. Important level on the higher side for this particular counter is 137. The moment this 137 level is crossed, then definitely the first target would be 160 within next 8 to 10 months.
So first target on the upside will be 137 and Take Solution. Ashish, I'm going to come back to you very quickly on HUL. We've got a query from Ujjwal Kumar. He wants to know in the near term, what can be the stop loss and target for HUL?
Okay, for HUL, the near term, the stop loss should be 1748. This is important level which will definitely help you out to safeguard your investment as a stop loss. On the higher side, if the price crosses 1795, this will be a fresh breakout of ascending triangle pattern formation, and the target would be 1860.
Okay, let's talk about a counter we don't very often talk about. Let's pull up Parag Milk Foods. It was in focus a little while back. In fact, for the year-to-date period, it's done pretty well for itself, if I'm not mistaken, up about 10% or thereabouts. Yeah, that's right. So 10.3% or thereabouts. We've got a question from Chirag Sangvi on Facebook, and he says he's got a medium-term view, Sandeep. I don't really know what he means by that, but I'm clear that he doesn't mean a short-term trading view. So on the fundamentals, are you convinced that he should hold on? He's holding, I think, at levels of 240, and the stock is currently at 273.
Yeah, certainly he can continue holding the stock because, the fundamentals are really very attractive. And then the sector also is very attractive because somehow I feel that food specialties and all these stocks really will do well in the long term. But then corporate governance, again, I have been talking about corporate governance a lot these days because, now the compliance norms have actually been, going up. The government has been very, very cautious about the whole setup now. So all these mid-sized companies, mid-caps, small caps, will actually go through all these things, pains also. So I feel that, Parag Milk is a fantastic story, fantastic growth. The CAGR of last 3 years is fantastic. Return on capital employed, though, is not all that great. But then there are some debts also in the company, but the valuations have all priced in. So I feel that, he can continue holding the stock.
Okay, Ashish, a technical view on JK Lakshmi Cement. If somebody is bought around the levels of 342, what are the levels that you would be monitoring on the upside?
It has already rallied and it is in a correction mode, and this correction can take the prices to the recent low which it has made at a level of around 324. So if someone is holding this stock, keep a stop loss of 323 on a closing basis. Now, if it has to perform, it has to cross important level of around 341. If it goes above 341, then the next target for short term would be 359.
Okay, well, it's time for the rapid fire segment. This is, remember, where we try and fit as many questions as possible in the span of 2 minutes. Quick shout to both our experts. Keep your answers as short as possible. The first question is from Vibhav Raman. This one's for you, Sandeep. Avanti Feeds bought at levels of 520 for a period of 5 to 7 years. The stock is corrected since those heady levels, and it's currently at 350. Should he hold on?
I don't track this stock, so I'll not be very confident in commenting.
Okay, fair enough. We'll take another one.
Okay, Mr. Monga writes to us. He's holding 2,000 shares of Bank of Baroda at nearly 122 rupees. Ashish, he's asking if he should book out right now or hold on for the next 2 to 3 weeks.
Definitely, I would recommend him to hold on for the target of around 139, and stop loss should be 125.2.
Harshal is looking for a long-term view on Dr. Reddy's in the pack, Sandeep, based on valuations only and prospect of future growth. How do you rate Dr. Reddy's Labs? Would you invest in this or another?
I'll not be very confident in recommending Dr. Reddy's. Somehow I feel that it's a hold. But if one has to really enter into pharma stocks, then Ipca Labs somehow is very attractive to me. In fact, I've been recommending this stock, and it is a big outperformer in the sector. Ipca Labs, Suven Life Sciences, one can really look at it.
Okay, Ashish, short-term view on ITC on the charts?
Short-term view, ITC, it will remain in a sideways zone. It has to cross 282 to outperform. So if someone is holding, have a stop loss of 269.
Sandeep, care ratings. Ishan wants to know the fundamental view. He's looking to hold for 3 to 4 years. Should he go ahead and buy?
I think one should think before getting into these stocks. These stocks will now face big levels of compliance from the regulators. In the past, lots of things have been happening, where question marks have been raised against these particular rating agencies also. So I think one should not enter into the sector right now.
Sandeep, last question. BEL for next 1 year. Do you like this counter? If yes, what sort of price can one watch out for?
Oh yes, certainly. I've been recommending this stock since the levels of 80, 85. It actually corrected and then again took a very good base at around 80, 85. And I feel that it's a fantastic beneficiary of lots of policy initiatives the government will be taking. So BL is a good buy at these levels also, buy on declines also, and 160 is the target.
All right. Well, Mayank is talking about Unient. I'll have to look up that counter. I can't find it on my screen right now. I promise I will. We'll come back to that perhaps tomorrow or the next show. Thanks so much for joining us, though, both our guests. Thank you so much, Ashish and Sandeep, for helping our viewers out with their queries. That's all we have on this edition of Ask PQ.
Well, but remember, we're just a tweet, post, or a call away, so please keep your queries coming, and we promise to address most of them through our shows. For all previous episodes, you can visit our YouTube channel or our website, bloombergquint.com. Stay tuned to Bloomberg Quint for more news and updates.